What's going on, everyone? So clearly we had more downside. In yesterday's video, I was saying there was more weakness and more downside. We clearly saw weakness in the bonds this morning. They came back and retested a major level of support. And also this morning, I said that this is most likely just a dead cat bounce in the indices with more downside around the corner. So clearly that worked out. We can see the huge weakness. I also said that the SPY would break down below 452 and then potentially come back and retest 451. We closed below 452. So in today's video, I'm going to talk about what the next steps are for the market. Oh, and by the way, I started to scale into calls on the indices for about a month out. Very, very small positions. But yeah, all right, so let's get started with the video. I'm going to go over the SPY, the NASDAQ, the IWM, the 30-year bond, and of course, Bitcoin and Ethereum. So without further ado, let's get started with this. All right, so here is the SPY. So clearly we can see that we're trading outside of the lower level of the B band, which is now generally a good dip buying opportunity. All right, so now is a good time to start scaling into calls, especially because we really fell into the close. And we fell down below major levels of support. So it's a good opportunity to now start scaling in. Personally, I believe that the market is going to continue falling. I would absolutely love for the market to really have a huge red day tomorrow, break down below 450 even. That would be ideal on the SPY. I would really love that. But what I think is most likely going to end up happening is we might bounce up a little bit, chop around, and then people will see the strength of the 30-year bonds and we'll make a decision from there. But that's essentially why I started to scale into calls. The reason why I believe that there is more downside though is, once again, this RSI does not want to sharply fall. Even though we sharply fell in the price action of the SPY, the RSI is still being very stubborn. It does not want to become oversold on the RSI, even though we're extremely oversold on the Bollinger Bands. So that is telling me that there is still more room to the downside. Also, the MACD, it's a good sign that the MACD is starting to show a lot more weakness. It's much more sharply falling to the downside. But this RSI is it's still scary to me. What I was saying over the weekend, what I was saying yesterday, I was saying, these indicators, they look they were looking frightening to me at how strong the indicators were still holding up, regardless of how weak the price action of the SPY was. So you can see why I was so frightened, basically, of the indicators. And currently, there's still more room to the downside. So essentially, what I already said, I would love for it to fall down lower. 448 is going to be another major level of support. I would love to buy some more calls at 448. And essentially, the SPY really, if it breaks down below this December 20th low, then I believe that 450 is just going to be broken, and then we're most likely going to come back and touch 448 as well. And then, that's when I'll start signaling much more aggressive dip buying opportunities on the SPY and everything else as well. But currently, I do believe I would love to have at least one more huge red day this week. All right, so there's my analysis on the SPY. Let's go ahead and take a look at the Russell. All righty, so the Russell had 2 days in a row where it closed outside of the lower level of the B band, which is great. We want to see another huge red day, but the fact that the Russell is this overextended to the downside, it is much less likely that it will fall much lower, right? So that's why I'm saying I would love for it to fall lower, but it's not a guarantee, right? Also here, the RSI finally became oversold on the Russell, even though slightly, it's 29.93, and oversold on the RSI is 30. But regardless, we still are technically oversold on the RSI finally. And this MACD level is lower than where we were in January 7th, finally, right? Like I was saying, there was just a discrepancy in the indicators. So now you can see the discrepancy that I was talking about basically showing itself in the price action. So I hope if you guys have been watching my videos, I was saying, there's a huge discrepancy. The MACD is still all the way up here, yet the MACD over there was much lower. That means that there's much more room to the downside. So this is what I meant. And clearly you can see that it worked out, right? So this level right here was a very, very important support at 204.81. And today we closed below that level. We can clearly see we closed below that level. So the next important level of support on the IWM is 201.48. That would be I would love for the IWM to go there. But when it is falling this dramatically, most likely what usually tends to happen, especially when we trade it outside of the lower level of the B band like this, most likely what usually tends to happen is we bounce up a little bit and then we potentially will just chop around. But again, it really all depends on the 30-year bond. But that's really another reason why I started to scale into calls. It's not every day that we get a really, really safer buying opportunity. And when we are this overextended in any indice to the downside or the upside, usually, essentially, when we are algorithmically overextended either to the lower level of the B band or trading outside of the upper level of the B band, algorithmically, what tends to happen is the stock wants to revert back to the mean, meaning it starts to trade within the Bollinger Bands again. So, that's why I bought them out for a month out. Usually, every single time I've bought, or alerted these calls for a month out on the NASDAQ especially, or the SPY, they've gone for over 100%. So that's basically what I'm assuming is going to end up happening again, as long as the IWM can kick its butt in gear. But hopefully it happens on the SPY at least. So yeah, so 201.48, I believe. I would love for it to be tested. I personally do believe that there is a bit more downside room. So days like this, it's days where you buy lotto puts and you start buying longer term calls. All right, because there is a small chance still that there is a lot more room to the downside. So you would buy the lotto puts so that you would capitalize on the move downwards. But in the mid to longer term, you believe that the market is not going to remain over here. It's going to end up bouncing. That's why you buy the longer term calls. All right. So there's my analysis on the IWM. Overall, it's finally a good sign that the RSI is finally oversold. But the MACD still, can continue falling lower, and the IWM does have a lot more history of showing outside of the lower level of the B band, much more than the SPY or the NASDAQ, which is why I believe 201.50 is still a plausible target to the downside on the IWM. All right, so there's that. Now let's go ahead and take a look at the 30-year bond. So before I go over the 30-year bond, I want to go over the largest tech stocks. All right, so Apple, obviously, we can see it closed below a very, very important level of support at 168.34. And you can also see Apple is trading outside of the lower level of the B band, which is a very good sign because it means algorithmically it's very overextended to the downside. So seeing as though this fell like this, right? Yet the RSI is still not really showing as much weakness, tells me that there is still potentially more room to the downside. And the next important level of support for Apple is going to be 163.76. So it's a good sign. It's a bullish sign, actually, that Apple is this overextended outside of the lower level of the V band. Go ahead and take a look at Amazon. Same thing. Amazon literally closed basically at this level of support at 31.27. We closed at 31.25, and we're very overextended outside of the lower level of the B band. Obviously, you can see Amazon goes much, much lower. This is that same exact support level here from January 10th. It can still fall much, much lower, is my point, right? So it's another huge trillion-dollar company trading outside of the lower level of the B band. And for these very, very large trillion-dollar companies, when you are trading so far out algorithmically, either to the upside or the downside, stocks want to return back to the mean. That's just how they are algorithmically. All right. So Amazon and Apple fit that criteria. Let's look at Microsoft. Microsoft is showing weakness. It it definitely reversed right outside of this level of resistance, and we closed red. So it's not as overextended to the downside. Google is not as overextended to the downside either, but both are showing tons more weakness. So there is much more room to the downside, and that's why I believe we can still have another red day. All right. So we just looked at the largest tech stocks and basically showing that there is still more room to the downside for them. So now I want to talk about the 30-year bond. All right, so here are the 30-year bonds. One of the reasons why I entered into calls is because the 30-year bonds started to close above this major level of resistance, that essentially the support that we broke, right? So we started to turn green just a little bit. Obviously, this isn't the most bullish close, but it's a good sign that we're starting to creep up just a bit. But again, this does not mean anything. This could easily, overnight, this could just turn red, and then we could end up below this once more. So again, I was sharing that there's excessive weakness in the 30-year bonds, and that is not to be taken lightly. Because of that weakness in the 30-year bonds, we saw the clear-cut weakness in the overall indices market. So that's why right now I started to scale into calls slowly. I still believe that there is more room to the downside. One thing that's kind of telling me that is, number one, the RSI is showing a bit too much sensitivity, and essentially the RSI is basically we barely moved upwards, and the RSI is already starting to creep up, and that's not the most bullish sign, obviously. All right, we would have wanted the RSI to just remain stagnant or still be pointed lower, and then have a green close. So this is not the most bullish scenario for the 30-year bond. Another thing is the MACD is falling, yet we're breaking upwards, so that is somewhat bullish. But overall, purely, we're looking to close above this level of resistance, and we're very overextended to the downside on the indices. So we're playing for a bounce. I bought calls out for a month, so it is what it is. So now, what needs to happen is this level of support needs to hold. So tomorrow, if we can, hold this level of support tomorrow, what will most likely happen is the indices will start to really send it, and the 30-year bonds will confirm this bit of a bottom. So similar to what happened back here, January 6th and January 7th. Oh, sorry, January 7th and January 10th, where we held this level of support. That was an indicator that the indices, felt more safe, essentially, and that's why the indices started to go upwards. We could look at this chart of the SPY, January 7th, January 10th. Basically, we fell lower. We came back and retested the 30-year bond low, right? So we made a low as well, but then afterward we ended up skyrocketing back to 473 on the SPY. So let's see if that happens once more. Again, if we fall below this level, then easily the SPY is going to come back and break 450. The IWM is definitely going to break 202. And that would just be devastating. And then the next level of support on the 30-year bond would be 150. So most likely that could still be the case because the MACD is still overbought. Yeah, we're still basically falling, right? So if we did fall below this level and really started to fall a bit lower, the MACD could fall much lower on the 30-year bond and then give enough space and room for us to cross back above, and that would potentially be the steam needed for the indices to really, really bounce. But currently, overall, this is not a bullish scenario. I still believe that we still see another red day tomorrow, but in case we don't, I start to scale into calls so that we'd be profitable regardless. So there's that for the 30-year bonds. Now we have to take a look at the NASDAQ. All right, so here's the NASDAQ. We can see that we're closing outside of the lower level of the B band, but that also doesn't really mean anything because in the past, we've had multiple days that we were outside of the lower level of the B band, and we caught this bottom here in early December. So we could easily continue falling for a few more days, but it does not hurt to start scaling into calls, in my opinion, which is why I started to do that. So you can see that we're basically at a major level of support on the NASDAQ, which is 366.50. Another thing that is just kind of really, really terrible, in my opinion, is this RSI is just so stubborn. It does not want to become oversold on the RSI. This is not good. I mean, look at how sharp of a fall we've had recently, and the RSI is just staircasing its way down. So if a huge fall like this could not cause the RSI to become oversold, that means that there's still tons more room to the downside, which is why overall I believe that there is still more room to the downside. You can also see that with the MACD here. So similar to what I was showing on the IWM, where the MACD is finally lower than where we were trading back here, right? The NASDAQ's the NASDAQ's MACD is still trading way up here compared to where it was back on January 10th. So the fact that we fell lower in price, yet the MACD is still higher, once again shows that there's still tons more room to the downside on the NASDAQ. And that is a very, very bad sign, in my opinion. And that's another reason why I've just been quiet these past few days, because the market has been taking a tumble. And there was no point of me alerting many swing plays because it just didn't, these weren't good opportunities to go long. But now that we are overextended on the Bollinger Band levels, it's a good time to start scaling in my opinion. So 366.50 needs to hold. The next level of support is going to be 362.72. And that would be a great opportunity. That would be a much better opportunity to really, really start, in my opinion, hopefully going a bit. I mean, we need to see if the RSI can finally go oversold. If the RSI can go oversold, that would be such a good opportunity, because the RSI on the NASDAQ rarely ever goes oversold. The last time it did was on October 4th, and we also caught this bottom, actually. The RSI was oversold here, caught that bottom, and I think we got 366. I think we got 352 calls back here. I'm almost positive we got 352 calls. You could go back to my Twitter. But I called these, made so much money, and then I just stopped making videos for a while because it was just such an amazing play. It just turned into new all-time highs. We broke above everything. These calls were up like so much. It was crazy. And that was a really, really safe play, and it worked out beautifully. So yeah, I would love for the NASDAQ to become oversold once more on the RSI, because it gives amazing confluence and amazing buy opportunities, especially when you're so overextended to the downside on the Bollinger Bands, and similar to basically what's happening right now. So I would love for us to fall lower, but price action and trading, usually what ends up happening is we most likely might chop up around, come back up to resistance, and then fall back lower, depending on the weakness of the strength and 30-year bond. So ideally, I would love for us to fall back lower. At that point, I'm going to alert much stronger calls. But there's my analysis. Those are the levels of support. To become bullish again, it's not even a matter of the NASDAQ needs to break above this level. To become bullish again, the 30-year bond needs to break above levels of resistance. It has nothing to do with the NASDAQ or the SPY or the IWM. It has nothing to do with the equity prices. It has everything to do with the bond, with the bonds and the yields. So I can't give you a level of resistance that, if we break above this, we're bullish again. None of that matters. We just have to monitor the 30-year bond. So yeah, there's my analysis on the overall stock market. Hope you guys enjoyed it. Make sure to like, comment, subscribe. And now I'm going to talk about the crypto market, Bitcoin and Ethereum. All right, so here's Bitcoin, and this is very, very good consolidation. Back up here we were very overbought on the MACD. And I was saying that's very, very bearish. So now the fact that we're still basically trading above 40K and the MACD is almost oversold. It's probably another 2 or 3 days before it becomes oversold. And we're still holding support. That's a pretty good signal. Overall, we're still, trading within this falling wedge, this range here. The resistance is still failing. The support is still basically holding. Again, 40,000 essentially needs to hold. The RSI is stagnant as well, even though the price was falling. So that is a very, very bad sign, as you can tell when you're looking at the indices. So the RSI looks very, very bearish. And the MACD is still showing that there is more room to the downside. But the price action did not vomit as much as essentially it could have vomited. So it's still a bullish scenario. What I still do think could happen is if we fall down below 40.5, then I think it's over. We definitely fall below 40. But right now, obviously we haven't broken above 43. We haven't really broken above 44 either. So those are still key levels of resistance. But overall, this isn't terrible. We're starting to hold, and in the next week, if we haven't fallen below 40K, then it can be time for a bounce, potentially, in my opinion. So yeah, there's my analysis on Bitcoin. Let's go ahead and take a look at Ethereum. Whoa. What's that over here? So Ethereum is much closer to... All right, so there's a few things going on with Ethereum. Number one, we're failing at this uptrend level, right? So clearly that still needs to break. A key level of resistance for tomorrow on Ethereum is going to be 32.35. So that needs to break. Number two, this RSI is terrifying. It means that there's still much more room to the downside here on Ethereum, right here, right? The fact that we had huge red days, yet the RSI has been staircasing its way down, barely even showing any weakness, is a bearish sign. It means that there's still more room to the downside. And number two, the MACD is not yet oversold. It still has probably another day or two before it crosses down below. So, all in all, there is still much more room to the downside on Ethereum. A sub 3,000 Ethereum is still very possible as well. So I would just be very careful about, it's not the time to go short. It's definitely not the time to go short now. Now is the time to start scaling into longs, in my opinion. We could still have huge wicks to the downside, but the fact that, back over here in mid-January, January 14th, January 13th, when we were very, very overextended on the MACD, the fact that we didn't capitulate to the downside and we held above 3,000 and we held above 40 and 41,000 on Bitcoin, that is a good sign. That's what we wanted to see. All right. So there's my analysis on the crypto markets. There's my analysis on the overall markets. I hope you guys enjoyed the content. And I will definitely see you guys tomorrow. Thank you.